Hey traders, welcome to the Flow Show on Tuesday, Powell Day, or Powell Day 1, as it were. Morning guys, how you doing?
Morning, everybody. How are you?
Yeah, all good mate, all good mate.
Good morning.
Morning Kay. So still, you managed to get your car sorted then?
Yes, the damage was limited, but still, decent chunk, but all
Yeah,
good, all good.
good stuff. I know that was driving you a bit bonkers, so it's nice to get
Yeah,
some of those problems out of the way, isn't it?
in a month and a half, man.
Yeah, bonkers.
Anyway, it's okay.
We'd be pleased to know we're getting snow here today and tomorrow.
Yeah, we have 19 degrees.
Yep. So I'll be snowed in. I won't be able to leave the house tomorrow. So I'll leave it anyway. Right. Let's get stuck in before we talk about the big powwow, as Brand says. Powwow coming up earlier or coming up later. In China, according to the Securities Daily, analysts see a possible China RRR cut coming. So despite the better data that we've been seeing there, and people really talking down this 5% growth target that China's put on, saying it's the lowest in decades. I don't know about that. There's countries who would give their right arm for 5% growth in this particular environment. It might be a fact that they'll struggle to even get there, but China data is China data. But this is a mainland China piece here saying that analysts still see an RRR cut coming, so maybe a little bit of a hint that they may still move on policy. This two-session thing that's been going on, there's been a few comments out. State media reporting that China will advance reform of branches of the PBOC, that's sort of the local branches. They're going to set up an enlarged financial regulator to absorb the current CBIRC, that's the China Banking and Insurance Regulatory Committee. That's the one who oversees a lot of financial aspects. So there's going to be a new enlarged financial regulator. Those guys, the CBIC, they are one of the ones who can pop up talking about the currency when it moves as well. So we'll have to see whether the rhetoric changes from whatever new board they govern, to see if they talk about FX as well and give us those little clues that we all like to look for. Job cuts are coming as well because they're going to cut central government department employees by 5%. Sounds a little, but likely a lot given how many people work in Chinese government bureaucracy over there. Coming over to Japan, and there was some earnings data out overnight. We'll take a quick look at that. Wages, income was up 0.8%. That missed expectations of 1.8%, and that came in from a 4.1% previously. Real cash earnings was the sour number here. They came in at minus 4.1% versus minus 3.2% expected. That is earnings after you've taken away inflation, so a much higher drop in earnings, in real earnings, once you've accounted for inflation, which has obviously been running higher. That's going to play into the wage negotiations that we're going to be hearing about, have heard about coming up, because they will want pay getting into positive territory. Speaking of the Bank of Japan and what they will have to do with monetary policy, the lower house will vote on the new governor and deputies confirmation 9th of March. So that'll be coming later this week, just before the BOJ meeting. The RBA, they hiked rates as expected by 25 pips, taking the rate to 3.6%. A lot of the markets seeing this as a unhawkish hike. They expect further monetary tightening will be needed. A path to a soft landing remains narrow. They remain resolute in their determination to return inflation to target. The monthly CPI indicator suggests that inflation has peaked. They say growth has slowed, uncertainty around the timing and extent of a slowdown in household spending, and household consumption growth has slowed due to tighter financial conditions. But wages growth is continuing to pick up in response to tight labour market and higher inflation. So as I said, some people call this a dovish hike by the RBA, even though they have signalled that they will be looking to continue to hike. It's going to be more data dependent. Aussie Bank Westpac says that they still expect the RBA to hike in both April and May because inflation outlook is still too high, and that it's too early to pause in April. What do you make of the RBA guys? Can you call it a dovish hike? I never know when hikes can be dovish.
Yeah,
dovish definition is
in a way, it's a dovish hike because apart from saying that due to inflation they need to continue to hike, the rest was a lot of caution about what can go wrong and where weaknesses are, and that's where the market really pushed. Well, I mean, really, yes, Aussie is lower, and we are 1% lower than where it was over the RBA. So in that respect, it was Aussie has been sold pretty gradually. But yeah, I also think it was a dovish hike, like the ones we had a while ago from the Bank of England, right? And it's comparable. You hike because of inflation, but then you point out possible weaknesses. So in that respect, I think the move is pretty logical. Yeah.
Yeah, I have to agree. I think what everybody tries to do is to get into the mind of each central bank, because they move rates, but really what's more important is where they're going next. And I think the fact that the RBA pretty much pointed out all the possible bad scenarios, like you said very correctly, Kay. They talked about inflation being high, they need to address it, but then they said all these things about the dangers, and that just shows them which way they are tilted. So I think that is it makes sense that the Aussie has underperformed today. Because people were asking me before the event, what do you think? I was saying I think they're going to hike and really not give us anything new, and so this was a little bit of a surprise. So I agree, it was a dovish hike. They can happen, and that was one of them, I think.
Yeah, definitely. And as you can see there from the Aussie dollar, it's actually had a bigger move this morning than it did over the RBA. We're testing a bit of a zone down here at the moment. I've had on my chart for quite a while. We've had this roughly 2-week period of consolidation, and only this morning are we now breaking down below that. This 50 fib could be pretty important. If we bust under there, then we could be heading quite a bit lower, probably down to the low 66s pretty quickly after that. Got these series of prior lows down here around 30-40s, so keep an eye on those. But otherwise, the next big area is down really 65-80s, and then a big old zone again down around 65, low 65. So keep an eye on this move here at the moment. If we hold here, then it has a potential to push up, but we know where the top side level is, around about the old 38.2 fib, 67.80, and then into 68. I have just nicked a little long down here just to test the 50 fib. Not going to give it much room. 50, and I'm going to be out just to see if we get a little tech bounce off of this level here. Right, back into the news, and staying with Australia. Excuse me. PM Albanese says the relationship with China has become more stable, and if invited to China, would accept. Optimistic Australia can avoid a recession. So still for now talking nicely with the Chinese, and if that continues, then that's going to be maybe a bit of a boom for Aussie commodities and the Aussie dollar in itself, if we start getting headlines dropping that deals and stuff are being made. Our old mate Brexit, you just knew it wasn't going to be the end of it. So despite having a resolution in play on this Northern Ireland Protocol. A PM spokesman for the UK government said there's still no date for a vote on the Brexit deal, and the aim is to keep talking to the DUP. So the DUP are still mulling over that deal and deciding what they want to do with it. So this thing is still ticking along. Despite that agreement, it's still not ratified, finalised, rubber stamped, signed, sealed with wax, whatever you want to call it.
Hence
And,
the cable's 5 pip move after the announcement the other day, right? The market is well ahead of all these things, right? They know, they know. It's until you have the actual, full stop, everything's been done and signed. Nobody cares.
Yeah, and we probably get a 5 pip move when that happens as well. So
yeah.
Anyway, it's still going. When you thought a deal is never a deal until it's a deal that's not a deal. Anyway, welcome to Brexit. Bank of England's man turned into a bit of a currency trader this morning. But firstly, she said that she was right on pushing for higher rates. Is now concerned about persistence of core inflation, and repeats that she said that she thinks there is more that needs to be done with rates, and that the terminal rate is beyond the forecast horizon now. So the BOE has a rough terminal rate, and that's potentially going to be higher. Says that a weak pound is significant for inflation. Look at that, economics 101 there. There's been quite a hawkish tone from the Fed and ECB. The question is, how much is priced into sterling? Well, she's obviously not watched the chart for the last 3 weeks because we've seen that repricing happening. The pound could weaken if a hawkish Fed isn't priced in. I'll point to that comment I just made a moment ago. Have a look at the chart, love. You'll see what's been priced and not priced. Over to the ECB, and ECB's Hawky Horseman, as we call him, sent ECB rate expectations up a touch yesterday. He called for interest rates to be raised by 50 pips at each of the next 4 meetings. He is one of the big hawks at the central bank there, so talking well, he must have heard what Centino said yesterday, his dovish comments, and decided to throw some hawks into the dove nest. He said, I expect it to take a very long time for inflation to come down. We have a very large balance sheet, and to reduce this to a reasonable level, we will probably need to be a bit more aggressive. ECB's DeCoste says Spain GDP outlook likely to be revised up, and CPI down. And into the ECB expectations, several things out. An ECB consumer survey this morning showed that 1 year inflation expectations dipped to 4.9% from 5% prior, but 3 years dipped to 2.5% from 3% prior. As you may know, we speak a lot about it on this show. The ECB are all about inflation expectations, where people in the population see inflation going. It forms a big part of their decision making. And while the 1 year number only dipped by a pip, that 3 year number down to 2.5% could be a bit significant. It could take a bit of the heat out of ECB expectations. It will certainly give the doves some fodder to make their case that hikes should remain lowish rather than more 50s to come along the way, and that some caution is needed moving forward. It will also probably get a few of them doing some victory laps that policy is working to bring down those expectations or keep them firmly anchored, as they like to say. Now the banks have still been at it. Nomura raised its ECB terminal rate for the deposit rate to 4.25% by July. That's up from 3.5%. They now see 50 pips coming in March, May and June, and then 25 pips in July. And Citigroup also now see an interest rate hike of 50 pips in March and May. So very much the market getting a bit more hawkish on the ECB. We know we're likely getting a 50 pip this month. There's still a question over future months, but banks are now leaning towards 50s coming again. That's going to need to be confirmed by the ECB, or else we're going to get a little bit of repricing of the repricing, shall we say. What do you think, fellas? Holtzy was very hawkish, as he tends to be. Are we going to get 50s at the next 4 meetings?
That's I think that's tough, but I think the next 2 are definitely done. But yeah, I don't know whether inflation needs to be very sticky for them to continue with 4 50s. I don't know what Kay thinks, but I think that's a big hurdle. That's a tall ask at the moment, at least as things stand.
Yeah,
No,
that'll take them to 4.5.
I can't see 450s in succession. I think Holtzman is, I don't know what he was on yesterday, but he's really trying to push the boat. But you always need Uber Hawks and Uber Doves. So, but for the time being, we must say that the Uber Doves are not having a lot to say. So the market buys the more hawkish stance. Let's put it that way, without probably trying to go too literally into what Holtzman was saying. So, and we see it on all the Euro crosses. Euro crosses are monster beat across the board.
Yeah. So, as you say, the market is going that way. If it doesn't get confirmed, or if there's any insinuation that this 50 is the last, then, as I say, we're going to see a bit of a repricing of the repricing. Euro.
Exactly.
Yeah, yields lower again, and the Fed taking the upper hand once again, I think.
And then you see how exactly this market functions, because we've seen those in yields go hand in hand. Most of the major yields going hand in hand over the past weeks, if not month. And yes, we had the repricing of the dollar. We had the repricing of the dollar to do, because if you look at what we've spoken about, the monster move in the US yields. But then also, if you look at the euro dollar, has been relatively stable. Yeah, you have intraday moves, but euro dollar is relatively stable, because I think the market is taking euro and the dollar a little bit as a small basket. Is not 100%, right? But it looks like the euro and the dollar are in one basket and the rest of the currencies in another basket, right here and now. And that's about what I was saying for a while, is that euro dollar could be in a range and the rest move around, and that's exactly what we are seeing right now. And I guess that if the ECB, since we're on the ECB, keeps its hawkish tone, and Powell doesn't give the market anything to trade the other way around, we are going to continue to see this kind of scenario at least into Friday. Friday is going to be a big day, right? And personally, since we're on the subject, I think Friday is a bigger day than today or tomorrow. Yeah, and I think this scenario can continue for a while, and you see bids in the euro crosses, and at the same time the dollar getting bought on bid as well, on dips as well.
Yeah, and like I say, I mean, in pure simple terms, you've got the Fed now hiking at 25s, the ECB hiking at 50s, and they're not signaling any sort of pause. So there's a bit of catch up in monetary policy, and that's rightly reflected in what's happening in the euro dollar. It's not heavily slanted for the dollar or for the euro.
Yeah. And you know what? I mean, Ryan, and you and I know, and Stelios as well, because Stelios has been in the market for a long time. But for those who haven't been in the market for a very long time, we have to know that Europe has always been considered as the old continent, where everything moves a lot slower than everywhere else, because it's a big block, and they have issues to keep their global monetary policy with more and more countries just in one line. And historically, you will have seen that US, for instance, economy is much more dynamic. So the interest rates move a lot more historically than what's going on in the Euroland, especially since the creation of the euro. And but now we have to trade a little bit of a different scenario, where ECB is actually going from lower levels and later to start, but they are going at equal, if not higher speeds than some other countries, and that is what this market is getting to grips with.
Yeah, 100% right, and that's why what we trade 90% of the time is central bank expectations. You know, you can look at your screen, you see it all there. The price is ticking, ticking, ticking. Every single tick is a trade. Okay, every time that moves, someone's trading something. But the overriding thing that investors are doing is trading the central banks. So if you've got a central bank going faster than another, you're going to see it in the crosses and the pairs that are associated with that currency. You know, Aussie Kiwi is a case in point. You know, this is being seen as a dovish hike, and it's reflected in the Aussie Kiwi because the Kiwi and the RBNZ are not as close to a potential pause as the RBA. Therefore, the money's going from out of Aussie into Kiwi. If you look at it, if you split it down, Aussie dollar is looking a bit weak today, as we've seen there. But then you look at the Kiwi, and it's still messing around this 62 handle, not knowing whether it wants to be above or below. So that's where you look at your whether the central banks are playing in the markets here. It's not playing in Kiwi versus the US dollar because the RBNZ is hiking away, the Fed are hiking away. It's virtually a zero-sum game. But when you match the RBA against the RBNZ, it's a slightly different story. Where you match the ECB against the RBA, it's a different story. So that's why the crosses this year, as we said at the start of the year, are going to be potentially more important than the majors, because you compare what's happening in the euro crosses compared to what's happening in euro dollar, it's chalk and cheese. Absolutely chalk and cheese, the moves. And that's it's important for traders to know that. So let's move on to another central bank, Riksbank's Thedeen says that it's too risky to refrain from rate hikes. Policy involves difficult trade-offs. We need to bring inflation down fast and buy a lot. The latest GDP figures are reasonably in line with our forecasts. It's not likely we will change our plans for asset sales, and the policy rate is the main tool. The Fed food price signals indicate a wrong direction, talking about inflation now. So yet again, another central bank who's firmly in the hawkish camp. Do you see any changes coming from them anytime soon, Kay?
So sorry, man, I was just reading something. Which one?
Riksbank. Thaden.
Well, they are much more hawkish than they used to be, and so they definitely are feeling unhappy, or how shall I say, uneasy with what's going on the Swedish krona. So I think it's also because we have to know that the Stocky is usually much more correlated to euro than is the Norwegian krona, for instance. Stocky is usually an accelerated euro, but now the Stocky has weakened quite fiercely against the euro as well. Over the past, put like maybe the daily. If you look at the daily, we've come a long way, right?
Yeah.
And I think the Riksbank is now openly uneasy about that move, and that's why they are going more hawkish. So we could be in for more hawkish meetings as well going forward. For as long as ECB stays hawkish, I think they are going to go on the Uberhawk train now, and we have to be a little bit careful because it seems, and I haven't been too closely watching everything that's going on in Sweden, but I think some of this weakness has also to do with geopolitics, because of their proximity to Russia, so. But we have to be a bit careful about their the Riksbank stance, and they usually wouldn't do it, but I wouldn't rule it out that one day we see like actual intervention from them, because they really seem to be thoroughly pissed off with this move in Swedish krona.
Yeah, and Frederick's asking about NOxX. I'll let you.
And I was going to come to that. And one way of expressing, if you don't want to trade euro stocky or dollar stocky, would be, because we are hanging around this parity mark again. You can see that from mid 2022 to 2023, we had a setback, of course, on the oils, taking NOK lower, but also Swedish kroner a bit stronger than the Norwegian kroner. And I think one of the views, if one thinks that the Riksbank is going to remain much more hawkish, and we are seeing a bit of adverse flows on the Norway because it's weakening right now. One of the instruments to express the differential in there would be the NOK stocky to go a bit lower. But okay, the NOK can move relatively fast as well if the oils are holding up like they seemingly start to do now. Then you need to be a little bit careful with this cross as well. But it's one of the instruments, if you don't want to be in euro or in dollars, you are a bit afraid of more euro or dollar strength, for instance, this is one of the instruments to perhaps have a look at.
Yeah, thanks, mate. And I'll let you have a look at the chart in more detail for Frederick there in a bit. So we have got Powell coming up at 3 o'clock UK time. Now, we had the actual monetary policy report, if you like, that gets presented to the various committees and houses last Friday. From that, Powell writes his testimony, which by and large is usually a pretty much a carbon copy of the last FOMC statement, but there can be times when he throws in a little update or some comments that are not in that statement. We're expecting the testimony, as usual, the text of it to drop before he appears, so around about maybe 1 p.m. London time, GMT. So keep your eyes on the screens there. The text will be dropped, and then we'll pick out any of the bones within that if there are any additional comments we need to be aware of that we haven't heard previously. So the market will initially move on that. Then the rest, he'll sit down, he'll read his testimony, and then he'll get questioned by all the bods in these committees, and then there's obviously some headline risk from that. But the bulk of it will be what he says in the testimony. That will be the initial move, as I say. So keep your eyes peeled on the screens round about from maybe, I'd say any time from 12 to 1, maybe even a little bit later. But usually the testimony drops, and that's what moves the market initially from that. That's it on the headline front. Not a lot really. Everyone's sitting and waiting and picking their noses, waiting for Powell to pop up. You guys got any news that I've missed or you want to share?
You do a splendid job every day, man. I have nothing.
Thank you very much. Well, I'll tell you what, you do a splendid job as well. So do you want to pop the link in, because you just put a blog post
of course.
this morning.
Of course.
Chuck that in there. Ali, you've shorted euro dollar.
You're right.
Yep.
Yeah, there's one thing I read last night,
yep.
And it's not so much a headline or an immediate market mover, but there's something interesting going on since the US, Europe, UK is all like pushing back against Chinese companies. Is that China has chosen Switzerland to raise money overseas. There was an FT article, and I found it just a very interesting read, because in a way it can explain why Swissy has been relatively strong as well. It's a little bit counterintuitive, by the way, but it does explain, because people, if you want to evade, or if you want to trade around sanctions also, and not to be seen, is that one of the ways, and if this China Swiss thing is true, and apparently there's quite a lot of Chinese companies trying to raise money in Switzerland, is that some accounts will put even more money in Switzerland if they want to get good returns on investments, because I suppose those bonds, those Chinese bonds, will come at higher interest rates than the other majors will. So, and I was thinking about that, and that could still be something that underpins actually Swiss franc through some correlation. But I'm starting to think that this could be like in relative terms, okay, a short-term gain for perhaps a longer-term pain if the rest of the countries now are starting to look at that and tell Switzerland to stop funding Chinese companies, right? So
Yeah.
I'm just keeping that one in mind, because we're always wondering why this Swiss franc continues to be strong, and
apart from the S&B playing both sides of it.
apart from the S&B playing both sides of the market now, which was my main argument for the Swiss franc not to weaken at all this year. And yeah, but this little thing could perhaps mean another gain, or explain some of the relative strength of the Swiss franc again, because just of the sheer flows of those things. But I'm actually wondering when other countries are going to start to slap some fingers in Switzerland again on this, perhaps. And it's something that I just read yesterday.
Yeah, no, thanks for putting that out, mate. One to keep an eye on, definitely, because you're right. You know, there's this constant tit for tat between China and the West, you know, over Ukraine, over Russia, over techs, you know, copyrights, patents. It's a constant thing, and it's all part of this geopolitical mess that's going on at the moment. You know, it's one thing that keeps running at the back of my mind, that, you know, is China maybe leading Australia on, you know, talking all nice and everything, but if the West do make big moves against China and what they're doing, Australia can't stand by and not fall in line with the rest of them, and that's going to hit their relations with China again. I wouldn't put it past China to be going through this discussion with Australia only to turn around at a later date and say, oh, well, actually, you know, we've got some snags, some problems, and we're not going ahead with anything. And that will be a big negative for Australia and the Aussie dollar. But yeah, it's all part of the geopolitics that we have to play with in this trading game. Yeah, just going back to Ali's had a nice little short up at 106.87. I was looking at this 107 level myself, but I haven't got in anything because it is proving a bit solid up here, up towards it. We've had a few knocks on the door now. I'm wondering if we're going to get a bit of a breakthrough. But for now, that's a good short off of that level, mate. So nice one on that, and good luck with your gold as well. Yeah, but I'm half in mind. I was half in mind to have a scalp this morning, and I missed it. We have got Powell coming up, so obviously there's that event risk, and I don't want to get too much into trades ahead of that coming up. But it could be a case that we see a blow through if Powell isn't as hawkish as the market wants, and then maybe a quick reverse if the sellers come back steaming in again. Can you guys see this breaking significantly, even on Powell? I mean, he's going to have to really raise the bar, isn't he, to either side to get a move out of range?
Yeah, that's right. We need to see something quite different for either the euro to break to the upside, to go towards 107. Which I don't think Powell is going to be saying anything dovish. I mean, there is really no reason for it. Of course he could, but I don't see any reason. And then on the flip side, can he be more hawkish than previously? Probably. I actually think the risk is if there is a change of tone, we probably get something more hawkish, because the main reason why we are in this environment, why they are still hiking, is inflation. And inflation hasn't ticked down. It is ticking down, but it's ticking down at a slow pace. So, I think that's a risk. At the end of the day, I think the year-on-year CPI number is going to start dropping fast, but we're not there quite yet. And for today and tomorrow, I don't see why Powell should be anything else than he has been over the past weeks. So so I think I agree with you. I think we need to see something materially different for the euro to really move out of this range. But I think the risk is for for Powell to be more hawkish, let's say, and the euro to start breaking lower. That's what I think the risk is. But it's not the most likely event. I think he's going to kind of toe the line and not really give the market anything different.
Yeah,
I hope he does, because that gives volatility and we can trade it. But I don't see why yet.
Exactly. So you have to, when you get these events, you have to look at what is the market expecting going in, because even if Powell doesn't say anything, if the market's got expectations that he was going to say something, that's a price move in itself. So we know the market is leaning more hawkish for the Fed. We know that because yields got up above 4%, dollar rallied, so on and so forth. So the market is, what they really want from Powell today is confirmation. Are they right to have those additional hawkish expectations? And if Powell doesn't say, yep, you're right, by way of his comments, then you're going to see a reversal. You're going to see yields, holding lower or coming a bit lower, and the dollar coming down again. So you could find that 107 breaks in euro dollar just because of that. But then the market will go back and say, right, well, he hasn't changed his tune, or he hasn't given us anything more hawkish than we were expecting. But the Fed are still in their policy. So you may get a quick spike through 107, and then it doesn't last, a bit like the bond yields above 4%, and boom, back down we come and back in the range we go, because the rest of the market says, well, we are where we are, and that's what we were pricing beforehand. Conversely, it'll be more of a shock if he is hawkish. You'll probably get a bit of a confirmation move in the dollar, so dollar higher, euro dollar down in this case, but it will be what the market was half expecting anyway. So how much more will it price into that? So it's these things, it all has to be looked at as where is the sentiment going into it, because sometimes it doesn't matter whether Powell's hawkish or not. It's what the market was expecting him to do at the time, and that's what really brings the move, as opposed to what Powell actually signals from his speech. What do you make of it, Kay? We know your thoughts that you're not expecting huge fireworks from Powell. What would it take to give us
it take him on the hawkish side, it take him saying that 50 is fully on the table because the market is expecting 25, but he's already pricing in what, 30, 31 or so. So they've gone some sort of a way towards the 50, but still hanging closer to 25s. So on the hawkish side, if he leaves the door wide open to 50, then I think the dollar will get a boost. For the rest, personally, I really think he's going to walk his usual fine line. He may come into the market or tell the markets in hidden terms a bit of a "I told you so" when they were trying to reprice yields lower or an earlier Fed pivot, because he has the support of the data that we have seen. But I don't think that he's going to come out all guns blazing either. So they went into data dependent territory right over the last meeting, and I said all central banks are now going into data dependency with various degree of hawkishness, but I think he's going to confirm the data dependency to me. What could happen on the dovish side is that he just confirms perhaps a 25 at the next meeting, but I really don't think he's going to go that far. That's not his habit at all. What can be dovish? Well, I don't really know. Unless he warns against that one-off January payroll, that could be something dovish. But for the rest, yeah, I mean, personally, my base case is that Friday is more important than today and tomorrow. But okay, I mean, he can, and as we know, and the algos will dissect every letter of every word he says.
Yeah.
So we are going to see algo moves. he's the Fed chair after all. So we have to be prepared to see moves. But will they at the end of the day tell us something? I'm not sure. I'm really not sure. It's not my base case.
Yeah, no worries, mate. So just looking around some other pairs, cable had a little mooch up above that trend line that everyone's watching. It hasn't lasted. We're back down to the 120 on that. We're getting to a point, I think, where it's got to go one way or another. But we keep coming back down to this 120, and these, whatever happens at this trend line, the highs are getting lower and lower, which suggests that the path of least resistance may be down. Of course, we can get a move back down to the 119.20s, 30s, and we found good support there just ahead of the 119. But you've got to say on the basis of this, the trend is for these highs coming in lower and lower, keeps the bearish pressure on. And we've got to get a move either way. But again, you know, Powell could give us a little bit of a fake break. If it's something a bit hawkish, he could send us down to these levels again, maybe even below. But will it last? If you see a move down there like that and it quickly reverses and get back above, that's usually a signal to you know, look for a fade, get into some longs and see if we get back up, you know, back towards this 120 level. But a good range to play there. It might be one I'll look at for Powell, because at 120, you know, 80 pips away from these lows may be a potential stretch point to look at for anything mildly hawkish from Powell. Aussie dollar already looked at, Kiwi as well. Euro sterling. So here's one that we talk about when you're talking central bank divergences. So the ECB obviously looking a bit more hawkish than the Bank of England. Personally, I thought this might be a little bit higher. I still think there's probably an element of the market who think that the BOE are going to have to keep doing more. Certainly I do. But I'm not prepared to swap this around and go short euro sterling on the back of my expectations for the BOE to keep hiking and having to go higher than the market expects. But what I want to do, if I get an ECB meeting coming up, if they are hawkish, if they do talk about more 50s past this meeting, we should be getting a move up to 89. Maybe we finally get a move to that 90, test the 90, maybe even through it. I think if we get up there, and depending on the message from the ECB, I may start to look at flipping the position around, getting out some more of the longs and looking to get in shorts. Certainly if we get up in the 92s, 93s, which looks a long way away right now, that'll be an ideal area to start scaling into shorts. But for now, I'm still looking for the ECB to run ahead of the Bank of England and maybe get this one up to that magic 90 level that we've all been waiting for so long, Stel?
Yeah, I've had that target for a while. Sorry?
Yeah. You've given up on it a bit, haven't you? Getting the 90? You seem to have.
Well, you know, we might get there. I had this target for months, right? And we got to 89.6 or whatever it was. I just took that as a win and said, that's it. Yeah. So now I'm no longer bullish. I'm kind of neutral until we see further developments from both central banks. But it was a really good run, though, from 83s up to 90, almost 90.
Yeah. Cheers, mate. So, yeah, run up there. And then if we get over 90s, then I'm going to be looking to change around the position, perhaps get out my longs once and for all. One other one, dollar CAD. Still waiting for this move to 137. I know this is going to be one of these ones where I've been waiting ages for a move up there for potential short. But I know if we get up there, it's going to bust straight through it. I'll be short and then boom, it'll be 138 next. So I'm going to be looking at this one with a bit of caution. But again, it's another one that's going a bit sideways. We got the BOC obviously this week as well, so a bit of a pause coming in here. I'm going to expect a bit of a neutral tone from the Bank of Canada. We know they're on pause. We know they're waiting for rate hikes to work their magic. They're data dependent like everyone else. I don't see anything too hot coming from these. The only real question is if they, maybe start to look at the other side, a more dovish side, if inflation, keeps coming down further and further, will they need to start looking at cuts? And is the market going to start pricing cuts coming in further down the line? Because as we know from this market, if it's not hawkish, it's uber dovish. We were pricing Fed cuts into the end of this year a few weeks ago. Will that happen for expectations for the Bank of Canada? If that happens and you've got a Fed hiking, then again, this is a bit of a bank play, divergence play. Could see this mooching much higher, and maybe even a run to the 140 level if the Fed is strong and hawkish and the Bank of Canada turns slightly dovish. So lots to look at from all these central banks. Ali's just said, our mate Timmy leaks leaked that the strong economy will lead to more rate hikes. Yeah, that goes hand in hand. A strong economy can lead to further rate hikes, because a strong economy means a strong jobs market. It means strong wages. It means strong consumer spending. It falls into this soft no landing, but it depends how hot the economy gets. You know, usually rate hikes are to curb inflation, but also to take heat out of an economy as well if it's running too hot, because that brings inflation along behind it. So yeah, you know, a strong economy will keep the Fed on the hike path, but they know they've done a lot already, and it's not all looking like a soft landing. There's still elements, maybe housing, so on and so forth, that will still be impacted from these hikes that we've had already. So it's not all going to be one-way traffic, but yeah, strong economy leads to rate hikes as the rule of thumb. But remember, we've come a long way already. What do you make of that, Kay? That comment from Ali?
Kicking in a wide open door. Economics 101. I mean, Timmy Leaks has a lot less leaks than he had a year ago. Yeah, I mean, yeah, okay. Anyone who has been in the market for more than a month knows that, right?
Yeah. His economic analysis leaves a lot to be desired. He may be a Fed whisperer, the new Fed whisperer, and has the ear of someone at the Fed. But yeah, his economic analysis, well, pretty much all of us can do it. Last one I'll look at, and then I'll hand it over to Kay or Stella if he wants to have a look at anything. Keeping an eye on dollar China. We found this area around the fibs, the old fibs, the 38.2s. A bit of a ceiling at the moment, up towards that 6.95. The 6.91 that I've been watching for a while is becoming a bit wishy-washy if we take it down to a bit closer. So it's still a bit of a pivot level. You know, if we get above, we hold. If we get below, we hold. But it's a bit undecided here. But we're running into this level, which is a former level as well, going back. If we get above there, we could have a little run up to the 7. And I'm going to be keeping an eye on that for potential short, just to play the range, maybe between the 7 and down to this big level 678, or at least play it between there and the 691 if we ever move up there. But China's still a big focus with this 2-session thing going on, where they look to ease more. That could be a deciding factor here. Okay. Over to you, mate.
I mean, while you're on this dollar China, I think this this new CIBR, or I don't recall the new money that they use, but this new committee is just another proof that Xi is increasing his control over the Chinese finances. And I think somewhere it's putting me back into the buy the dip scenario on the dollar China, because recall when you said it, we said earlier that earlier in the year that some analysts were expecting an RRR or interest rate cut from Q2. Well, Q2 is about to start after the 2 sessions, and looking at how conservative they put their, for Chinese standards, how they put their GDP forecast for this year, he could force perhaps some of rate cut to try and kickstart it. In which case, I think we are going to be trading back above 7 on the dollar China, and those every little thing that happens here and now in over those 2 sessions and rumors here and there, it's telling me that they don't really want the China currency to strengthen right now, because they're gonna really want to kick up their economy. So that while we were on the CNH.
Yeah, definitely, mate. Yeah,
Okay.
I think you're spot on with that.
I'm going to keep it short because I'm looking at the time. I'm going to keep it very, very short today. So let me show you this one. That's the 10-year US yield. It's I think this week, and by the end of the week, I don't think we will be in this zone, in this relatively, let's say it, correction neutral zone. Well, it's not really a neutral zone, but it's been a traffic zone. 390, 398. I think that's where we trade outside at the end of come Friday after the NFPs. That is going to be where the dollar is going to head. And today we could see trade outside of this on Powell, of course. He has the Powell to take it outside of this range. But I think this is one that's going to be determining for the direction of the dollar come the end of the week, especially for dollars. And we will have had the Bank of Japan then as well, and for dollars which are really pinned to those yields, to those 10 years. Dollar yen, this is going to be, this and the Bank of Japan is going to be the driver. So I can't stress enough, this is really going to be one that I'm going to have like my eyes really close on it to see where this ends the week, because I think this could be decisive for where the dollar goes into next week. That for one. And then, yeah, Aussie dollar, Ryan already showed it a bit more in detail. Perhaps there was this bit of a, what is it, flag, pattern, triangle, whatever. It's broken after the RBA. And I guess anywhere inside this zone, we are going to find resistance now if Powell can put it back in there. I think for as long as we are above 67.80, I'm going to be a bit of a rally seller. Well, let's say up to 67.60 perhaps, and then if it goes above 67.80, it's probably gonna go higher. That is my view of it there. Keep an eye on this 50%, that 60s, all the sixes, 6666. It's a bit of a devil's number, so watch out for that one. If it breaks, it could accelerate. But for the time being, need to respect it. People in the room know my position. I've scaled back a little bit into this zone and waiting for the Powell man. Yeah, Kiwi, not much to say. Aussie Kiwi though, pay attention, because here we are. We are getting very close to the 107, 107.40 zone. This is really, to me, a pretty big zone. You can even put it a bit tighter. No, we need to keep the 107 in there. So it's 107, 107.40. That is really, for me, the danger zone on Aussie Kiwi. If we start to trade below there, I don't see any reason why we are not going to get back to those end of December lows on the Aussie Kiwi. And again, we've went below, back to retest this 108.75.85 zone actually yesterday, and it's been fiercely rejected, and now we're already trading a big figure lower. So I think we're in for a test here. We are definitely in for a test here. On what else? Yeah, Euro Aussie. A train. This is really a train. And to me, honestly, I see very little reason for it to stop, actually. We are retesting those December highs. We have broken through the trend line though, which was around yesterday. I highlighted this 159 figure 20 zone. We're breaking through. We're above there. If you look at it, we have this spike high right around 160, but I don't know really if unless we get like a reversal in euro data, this looks like a clear buy on dip still. This stuff it does look like this is going back above 160. It really looks very impulsive. Some people in the room have been playing this very nicely. Some people took profits around here for the little bit of a setback, and then and I was long here and I closed it on the day. So that is my novice trade that missed me 400 points. But hey, I mean, those shit happens, as we say. No, it's still looking very impulsive, this one. Another one, special mention today, is the Norwegian kroner, and despite oil's holding up, this thing is going back up. We're broken through the 9th of Feb highs, and we are already very close to the October 2020 highs again. And it's partially euro for sure, but also I think there's still a bit of those Norwegian kroner selling by the Norges Bank that the market is feeling a little bit fragile about. And if we look at Scandinavian bank research, they were absolutely not ready for this move higher. So I think a lot of people were a bit long Norway and getting forced out of positions. But keep an eye on what's happening anywhere in this 20-30 zone, the 30, and of course, this is a bit of a darts high over the pandemic, but 1130 is the 50%. So of the whole move from the post-pandemic down to the April 2022 lows, when gas was at its highs, and Europe had the knife on the throat regarding gas and everything reserves. Since then, I think still it's a decent area to keep an eye on here. And also start to listen to Norges Bank. If they start to not like this anymore, they could stop their FX. They could stop their Norwegian sales, NOK sales, and start to talk about the Norwegian levels. Keep an eye on this zone 11, 20, 30. I think it's pretty important. And really, the last one I need to show though, because I'm in it, as people know in the room. Dollar rand, a bit of shorter term resistance here, perhaps in this 1836-37 zone. But then when we look at the little longer term and levels that have been capped as well here, we are starting to have a view of this longer term trend line. So that's from the high on the pandemic high as well. Then we had this high, and then we had the previous high, which just overshot a little bit, but then we failed again to come back to low 18s. It feels to me that we are in a retest scenario here. Also saw the rand data, even if they are very much back looking. It was Q4 2022 data, but they're undershooting. They have geopolitical problems. They have the blackout problems internally. They have political problems. Ramaphosa is trying to replace the ESCOM CEO, but I don't know if it's going to help that much. So I think we are in a bit of a, unless Powell says something really dovish on the dollar, I reckon we are going to find bids here now again in the low 18s and for or straight away go and test 18.5 again on the dollar end. And that is it for me today.
Thank you very much, mate. Always appreciated. Just want to show you folks a couple of things. Let me share my screen. Just for some of you may not be aware, we have the ForexAnalytix Traders Funding Program, where you can trade our money, or ForexAnalytix money. You won't trade my money. My money's my money. But you can trade the ForexAnalytix money if you pass an evaluation, which is really stacked in your favor, in traders' favors. A lot of these programs have time limits, expiry times you have to have passed by such a time, and that puts a lot of pressure on. We have lots of people in our chat room in this program and doing quite well at it. Obviously, not everyone can succeed at this because it does require a lot of strong discipline, which is needed. All you got to do is pass the assessment. If you pass the assessment, then off you go, you're up and running. So you need to be very strict through the assessment, but we are making payouts to people, and lots of people in our room. So if you want to do that, check that out there. You can get an account up to $1 million. And your risk is really just the assessment fee. You know, if there's any black swan events or anything like that, when you have a full account and your account gets wiped for whatever reason, really your only loss is the evaluation fee. You're not liable for any losses on such things as black swan events or anything like that. So from a risk reward perspective, it's a pretty good trade if you're looking to scale up your trading. And also, if you're looking at joining us in the ForexAnalytix chat room, we're talking about Powell today, obviously, and what he might say and what he might do. Well, you'll hear it first in our chat room, and you'll hear what all our traders think about the moves and the sentiment and what his comments actually mean. They'll go in there first, which means you can potentially make a decision about trading as quick as anyone else, if not quicker than others in the market, because we are K-Man especially, and the other guys, they're shit hot in deciphering what the phrases and sayings mean. It's always better to be in a community. You can grab a 20% discount by using code FFL20. It's exclusive to me. Get you 20% off as long as you are subscribing. So check that out. Check those out if they're good for your trading. And apart from that, that is it for today, I think. Thanks to Stel, thanks to Kay for your valued input.
Thank you, Ryan, and everybody. And I just wanted to add, you know, the amazing thing with the chat room, sometimes when I'm not around and I'm not around the screens and I see things moving, I'm like, what happened? I have no idea. I go to the chat room. I don't go to Twitter. I go to the chat room, and somebody always has something to say about the moves and what's happened. So it's a really great place. I mean, I find it very useful myself.
Yeah, thanks, mate. That's what we're there to do. You know, keep traders informed. Monica, you've joined the assessment yesterday. Very good luck to you. As you know, you have free access to the chat room and the platform for a specific period of your assessment. So come and say hello if you haven't already. You know, there's also a specific room for the traders funding program. So if you have any questions, you can ask away in there. Good luck to you, and good luck to the rest of you as well. Be safe over Powell, and we'll see what he says and go over it tomorrow. Thank you very much, everyone. See you tomorrow.
Thanks, everybody. Thank you, Gavin, Chris, everybody, Monica. Thank you. Bye-bye.
Cheers all.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.